One of the UK's premier house builders and an award-winning FTSE 100 company, Berkeley Group comprises of 6 autonomous brands, each an expert in a particular regional specialisation. We've been delivering exceptional properties in London, Birmingham and the south of England for more than 40 years. From luxury penthouses, family homes and stylish apartments, we are experts in creating fantastic homes in amazing places and are renowned for setting exceptional standards in quality and design. To us, every project is an opportunity to transform lives, one development at a time. When you think of UK, think of Berkeley Group. One of the UK's premier house builders and an award-winning FTSE 100 company, Berkeley Group comprises of 6 autonomous brands, each an expert in a particular regional specialisation. We've been delivering exceptional properties in London, Birmingham and the south of England for more than 40 years. From luxury penthouses, family homes and stylish apartments, we are experts in creating fantastic homes in amazing places and are renowned for setting exceptional standards in quality and design. To us, every project is an opportunity to transform lives, one development at a time. When you think of UK, think of Berkeley Group.
Okay, hello everybody, and thank you so much for joining our webinar today. The topic we're going to be discussing is comparing renting and buying property when you make your journey over to the UK. My name is Will, and this is my colleague Weiyu.
Hello everyone, my name is Weiyu. Both Will and I work for Berkeley Group, which is one of the largest developer in the UK and in our Singapore office.
Yeah, so the agenda for the webinar today is Weiyu and I are going to speak about Berkeley. We're going to talk about who we are, what we do, and why our portfolio is a portfolio that's looked at globally as the best property options to buy within the UK. We're then going to look at a few case studies and compare what it really means to rent a property and buy a property, and how this can impact you as someone moving to the UK for the first time. When we have a look at the case study, we're also going to speak about our own personal experiences of renting as students when we were both in the UK. After Weiyu has shared her experience and gone through kind of the renting versus buying side, I'm then going to invite Samuel from Capricorn Finance, based here in Singapore, and we're going to discuss a little bit about the financing options you may have if you're looking to purchase property in the UK, and what they can do for you as a mortgage broker.
Sure. So let's start with introducing who we are.
Yeah, absolutely. So Berkeley are one of the largest prime residential developers in the UK. So we were established in 1976. So we've been building property for over 50 years throughout London, the south of England and Birmingham. We were listed on the London Stock Exchange in 1985. So we're a very, very well-known company. We're renowned throughout the United Kingdom. We currently have over 50 live developments throughout London, the south of England and Birmingham. 28 of those developments are based kind of within and around London. And the price points vary from anywhere within kind of £230,000 all the way into the millions. So an enormous variety of options for you to have a look at.
True. Later we'll bring on a map just basically to show our sites across London. Apart from what you just introduced, I would like to highlight some of the points that I think I'm pretty proud of being a member of Berkeley Group. So first is our customer satisfaction. This has been done by a third party, which shows we have very, very high satisfaction score. That mainly because we do have customer relation managers and the customer service managers for every single purchaser, every single client, from the moment they buy the property all the way to completion, and even 2 years after the completion. That's because we do have a 2-year direct warranty from Berkeley Group. Not many developers can do that in the UK. And on top of these 2 years, we do have a 10-year warranty for this building. And this only apply for new build. And that's another reason a lot of people would ask, why should I buy new build? Yeah. The other thing I would point out from the slide is our financial strength. So Berkeley Group is very well known because of our financial strength. We are listed company, everything you can see and find on internet. We never actually borrowed any money from any banks. Basically, we're cash rich. Every land we purchase, every building we built, it's all from our own pocket money.
Yeah, absolutely. And Berkeley are really at the forefront of the construction industry within the UK. So we really lead the way in terms of the initiatives that are being put forward in terms of construction, sustainability. If you go onto any one of our developments throughout the whole of the UK, you'll really get an idea of this. If you go into any one of our apartments, you'll see that we use the best kind of quality materials, all sustainably sourced. Our developments are very much mixed use, large scale developments. They consist of this very, very high quality residential, world-class facilities, and of course, an abundance of commercial space where we input restaurants, bars, different kinds of retail and different things that we know will kind of really benefit the people that are living on these developments. And regeneration is really kind of the main strategy behind what we do as a developer. So we take areas that we call brownfield land. So this is disused areas of land that were previously used for something else. Generally, they're very big in area. And we essentially transform them into these marvelous, wonderful developments that can be used by the existing surrounding community and the new communities that we bring into the developments themselves. We're very proud of that. And ultimately, there are two kinds of buyers, right? There are people that are buying a property for their families. Mm-hmm. So they're buying property with lifestyle in mind. They're buying property because they want, themselves or someone from their family to move into that property, or they're looking to start a portfolio. So they're looking to start a new investment portfolio, and they're looking for something that's going to get good capital appreciation and a rental yield. And ultimately, Berkeley's developments are built to service both of these. So if you're looking for a fantastic lifestyle, you're going to find that on our developments. And on the other side, if you're looking for something that's going to bring a good return and has all the fundamentals required for to be a good investment, that's also what you're going to find within our developments.
Exactly. Just to top up the regeneration part, not only restaurant and bars, we even built like senior cares and the schools and even transportation stations inside our development. All these, I would say, they are bonus points for both investors and owner occupiers.
Yeah, absolutely. And then just before we get on to the next point, we recently won the award for Britain's Most Admired Company. And that's something we're extremely proud of. Mm-hmm. And I think it really goes to show kind of the sort of company we are, and
very trusted developer.
Absolutely, absolutely. So we're gonna really kind of get into the grit now of what this webinar is about. And essentially what we're doing here is we're looking at renting and buying. We're looking at these two options, which are the main two options you're going to have when you kind of make that transition over to the UK. We are going to look at the pros and cons of both. So we're not saying there's anything particularly wrong with either option, but we're going to weigh up kind of how it looks if you're going to go in the renting direction or the purchasing direction. Before we get on to kind of the next point, I think it's important to say that we have 8 international offices around the world. So me and Weiyu are currently based in the Singapore office, as you may be able to see behind us now. But we have 7 other international offices spread across Southeast Asia, the Middle East, and mainland China. And what we kind of get from this is that we've seen every kind of student or new person that's looking to move to the UK and make that transition. We've seen a lot of different journeys going to the UK, haven't we?
Yeah, true. Just basically, like this slide says, the international students. I am one of the international students, and as you can see from the chart, how many of them are going to the UK every single year, and this number keeps increasing, and that doesn't even include the EU students. Yeah. So all these students plus the young graduates and plus people who are moving to the UK or London, they're all looking for a place to live.
Yeah, absolutely. I mean, the UK as a whole and London specifically in this topic really does have the fundamentals to attract people from overseas to kind of continue on their higher education journey. All the different fundamentals that we're not going to go into now, but in terms of kind of some of the best universities, the great lifestyle, post-graduation, some fantastic job opportunities. And from 2021 to 2023, that number of people going to the UK in terms of students, and we're not including EU students here, we're just talking about people from the side of the world where many of you may be watching from today, Singapore, Hong Kong, throughout Southeast Asia, the rest of Asia, maybe the Middle East. And, 2021, 2023, that number increased by 150,000. And by 2028, it's expected to be around 800,000 students.
That is a huge number.
Yeah, and a large proportion of those are going to be coming to London. It's 800,000 going to the UK, but perhaps 30–40% are probably going to be transitioning to London, going to one of the big universities there, and they're going to be looking for accommodation.
Yeah. And now we're going to bring on a simple comparison between renting and buying. Let's see how it's going to work. Yeah, absolutely.
I will just say about the slide we're on now. I mean, there's two sides to there being 800,000 people by 2027, right? There's almost a positive and a negative, and that negative side is that when such an enormous amount of people come into a city and they're looking for accommodation, they're essentially competing with each other to find sort of the best accommodation.
Yeah, right? Fight for a place to live.
Yeah, absolutely. And on the flip side of that, you've got investors. So you've got landlords buying property in London.
Very happy to be a landlord.
Yeah, absolutely, because that's your potential tenants.
True. Right, that brings to the question about supplies and demand.
Yeah.
But we're not going to go into this statics today. But of course, next time we'll come to our office as well if you would like to know more about that.
Yeah, absolutely. And before we get on to this next slide, I just want to say, please do ask any questions if you have any, or if you think of any questions kind of as we're going on through the webinar. We do have people live right now that will answer those questions for you. And we'll have 10 minutes at the end of the webinar where we can perhaps answer some questions live. So yeah, that'd be really fantastic.
So now if we look at the table, we are just picking a kind of an average price that most our overseas buyers or investors would choose. That's like 500,000 pounds. It could be a 1 bed, could be a 2 bed. And let's say we put down a 35% deposit and take 65% loan. And let's assume the interest rate is around 4%. I'm sure later Samuel will talk more about the interest rate. And in terms of the years studying in the UK, we take 3 years because that's most the undergrad students would do. And even if you do a master degree, that's 1 year plus 2 years after study, that with the PSW visa, that could round up another 3 years. So let's just have a simple and quick look about what's going to happen if you rent or if you actually own a property.
Yeah, absolutely. And before we get into it, I will say this is a hypothetical example. So we've put down a 4% interest rate as that's just what we've used for this example. It doesn't necessarily mean you're going to be able to get a 4% interest rate if you do apply for a mortgage. But of course, we have Samuel that will come in later on and talk about the actual interest rates that we do have available currently with UK lenders. So the first column on the left, we're just looking at a renter, and we've taken a very, very average number. So £14,570 is how much our renter is going to be paying for their first year. And they're just doing a normal undergraduate course. So we're just looking at 3 years. So over the course of that 3 years, we're looking at about £43,710. But that £14,570, I think a lot of people would assume that that's generally paid monthly, but that's not always the case with international students, is it?
No, because you cannot prove you have a regular, steady income, monthly income. So for a student, especially overseas students, most of the landlord would require you to pay 1 year, full year rent upfront, at least 6 months.
Yeah, and that can be risky, can't it?
Oh yeah, imagine like during the COVID, for example, a lot of students actually have to go back to their home country for, I don't know, 3 months, 6 months, and that rent is non-refundable.
Yeah, no, 100%. And of course, you can see in the columns where it says equity accumulation and capital appreciation that it's zero, because of course we can't acquire equity or appreciate on anything if we don't own an asset.
No.
And that takes us onto the right-hand column where in this case study, the student decided to purchase the property before they moved to London and begin their studies. So they took out a mortgage, and their mortgage payments each year were £18,620. So over the course of the 3 years that they were studying at university, their total mortgage payments accumulated to £55,860. But of course, they own the asset, and the asset is going to appreciate in some way. And what we've done for this case study is we've taken the stats that have been delivered by 3 of the top agents in the UK, and just taking kind of the average of that, so the general growth rate that we'd expect to see within London over a 3-year period. And so what number we've come to there is £17,880. So that's how much equity accumulation we've gained in the 3 years that we've owned the property. So what we can do with that is we can contribute it towards our mortgage payments. And so our net expenses overall are actually slightly less than if we were to rent.
Exactly. And I'm just looking at the number, like 17,000. That is almost like the tuition fee for a master degree.
Yeah.
So basically, within 3 years' time, ideally, you're already paying back your tuition fee just by owning this property.
Yeah, absolutely. And because you own the asset, you've also got the benefit of capital appreciation.
Mm-hmm.
So obviously, yeah, we've got the equity accumulation, but hopefully the property's also gone up in price. And what's not on this table, which is of course, a massive benefit, is what's this hypothetical student going to do once they've finished their studies?
After, yeah.
Maybe they're going to do a master's, maybe they're going to do a PhD, or maybe they're going to finish their undergraduate studies and they're going to work in the UK.
Mm-hmm. And actually having a place that grounded in the UK for yourself, you avoid paying very high rent. You avoid the risk of the rent going super dramatically again.
Yeah.
And even if you leave the country, you can either remortgage it, refinance it, or rent it out. Then you have income.
Yeah, absolutely. So it's a nice little kind of stronghold you have, a nice secure base, just in case you want to stay in the UK and continue on with whatever you're doing.
Very true.
And I think that kind of brings us on quite nicely to the next part of this webinar, which is we're going to have a look at a case study of one of our buyers who it was this exact scenario. They had a daughter that was looking to move to London to start her studies, and she purchased at one of our developments. And the case study we're going to have a look at is her kind of explaining what that purchase did for her family, the benefits, and what they really took from that. And I think, as well as this, me and Weiyu are going to talk about kind of our experience of renting when we were students and sort of compare it, because of course, we've got 2 very different experiences, me originally being from the UK, and of course Weiyu doing that transition from this side of the world in Asia to the UK. So Weiyu, I think it would be fantastic if you could share, first your experience with what it was like to do that transition from over here in Asia to the UK, and then your renting time when you were at Westminster.
Sure. So yeah, I studied in central London, but I didn't really stay there at first. It's quite expensive in central London. So I chose a student accommodation, but not really from my university. As you can see from the first picture, that's a picture I downloaded from the website where I stayed. That was in Zone 3, Northwest London. The main reason I didn't choose the uni accommodation is I compared the price and the facility, and this is like no-brainer. The 2 photos I put on the right, that's basically kind of like the university accommodation. You only have a single bed and it's quite small, and you have to share with others the living room and kitchen. And for almost the same price, I could get a much newer and bigger space.
Yeah.
Well, I say bigger. I remember it was around 20 square meters.
Yeah.
So I know if you compare this to a uni accommodation, yeah, it's great, but actually compared to renting outside, which some of my classmates did, like 3 of them, they shared a big house, paying exactly the same rent, much more spaces. But the other side of choosing a student accommodation is a little bit hassle-free, especially for overseas students. You imagine you just arrived in a new country, you don't really have any local friends, and you don't maybe even speak the language that fluently. Having a student accommodation where they cover all the utility bills. Yes, you pay everything up front in 1 year. The security is good compared to renting somewhere else. And also, the price was okay for Zone 3 with great connections. I could go to central London just within 15 minutes. Really doesn't mean you have to live right next to your university. But the price was not cheap. I remember it was £175 for per week just for a studio. And I literally just checked the price for the same room. I checked it yesterday, it was already £330.
Wow.
In the meantime, my friend paying the same price in central London was really only getting a small single bed ensuite. Yeah. So what about you?
I think it's important to kind of compare the differences between your experience and my experience, because for someone who is born in the UK and ends up going to a UK university, it's very normal to go to a university. If it's a campus university, you will have student accommodation provided by the university. If it's a non-campus university, you will sometimes have the same. But you tend to do your first year kind of within that with new people, and you make lots of friends. And then your second, third year, perhaps your fourth year, you're renting. You're renting around the city that you're living in, and it's very exciting. There's you. I mean, my second year was me and 5 friends going into our first ever rental property together. And I actually remember my mum. The first time she saw the property, she thought it was horrendous, and she couldn't believe this is where we were going to be living. But we really didn't care. We had a lot of space. We had our own rooms. We had a garden. It was all very exciting.
I guess that's why if you compare to a student accommodation.
Yeah, no, 100%. But the main difference was that we knew if anything went wrong, our parents realistically were 3, 4, 5 hours away. They were a train journey away, a car journey away. If anything, really went into desperate times. If we couldn't pay rent, if something went wrong in the house, one of our dads could come over and they could help us.
Yeah.
And I think that's the key difference, is that for people that live in the UK and they're getting that accommodation, it doesn't matter as much. And it's not normal for people in the UK. It's very unheard of. Not unheard of, but yeah, it's actually not very normal for people in the UK to move to university and buy a property. Renting is kind of the thing to do.
I guess because you're still in the same country and you don't know what's going to happen after graduation. Yeah, you may move to another city, and that's maybe when you consider to buy.
Yeah, absolutely. But if you're moving from the other side of the world to the UK, you're leaving that secure base and that security that you've known for the last 18, 20 plus years. And you're in a completely different time zone. You're perhaps 13, 14 hours away.
It's not 2 hours away.
Yeah, and it can be quite daunting, especially with all the things that you have to look after if you're renting. You're responsible for reporting any damages, anything that goes wrong. Your landlord might not be very communicative. You've got a lot that you've got to, as well as all your studies, of course.
On top of the study. And I know if you're actually even late on paying any of the utility bill, that would affect your credit in the future. Yeah, it's not joking.
No, of course, yeah. And this brings us on to kind of the case study of one of our buyers who thought through all of this and thought through kind of the renting option and the buying option, and then decided on the buying option. And I mean, you're very familiar with the buyer, so it'd be great if you could kind of take us through the buyer, the circumstances, and kind of what led to this decision and the benefits that they kind of saw for their family.
Sure. So the daughter actually got accepted in UAL. She was very, very talented, and the mother started to worrying about, okay, we need to find a place for her. They checked the student accommodation and they checked a few locations as well to rent. And in the end, she found an agent and went to one of our sites. It's called the Green Quarter, which is also not in central London, that's in Zone 4, West London. Although seems far on the map, but with the connection, which is the latest tube line called Elizabeth Line or Crossrail, later we'll have map on, that takes her about, she said 20 minutes from where she lived to the university. And she happened to find another friend who studied in Queen Mary and another friend who was doing internship in Regent Street, that's central London. They all live on the same site. This is a beautiful site, like very greenery, very convenient. So not only for the daughter, so they purchased a 2-bedroom, and the daughter said, actually, after 1 year, once I'm familiar with everything in this country, in this city, I might just rent the other room, let the other room out to my close friend. Yeah. And that's like extra income to her. And for the parents, when they visit the daughter in the future, they don't have to stay in a hotel. They can come, stay actually in their home and cook for the daughter. I guess it's not only just a property to them. It's really an investment. It's a home, and it's a future security.
Yeah, no, 100%. And I think one of the main differences between renting and purchasing a property is that when you're renting, the likelihood is you're going to be renting multiple places. You're probably going to be moving around.
Keep moving.
If you're buying a property, you're kind of setting up a home away from home.
Yeah.
You're setting up kind of a stronghold. You're within a community. And it's something that's very unique about Berkeley developments, isn't it? Is that we build essentially townships, big communities, and these are kind of the perfect places for international students to call homes away from homes, because there's likely going to be a lot of people on these developments that are in similar situations. These communities form, all kinds of different social groups. You're not just thrown into a city and kind of left to your own devices. You're put into what is essentially just this new township that you can then start to become more familiar with, and it can just start to feel more like something that you feel secure.
Very true.
And I think the last 3 points on this slide, where she was talking about the benefits, kind of really summarize everything we've been talking about. It was more financially viable in the long term. There was capital appreciation because she owned an asset, and most importantly, her daughter felt secure and stable, and there was something that she could use in the future.
I think that basically shows the benefits, and like we said, it's not only about numbers, not only about paying how much to the rent or mortgage. Sometimes there are other factors to this decision.
100%. And of course, talking about one of our developments leads us quite nicely onto the next part, where this, so in case you're not familiar, this is the map of London, the London Tube map. And before we kind of get into it, Weiyu, it'd be great if you could just pinpoint a couple of the universities we've got on there and what some of the different labels are.
No problem. Apart from all these lines, remember, London is the very first city having underground. So it's very, very convenient to travel around by tube or underground. So all these icons in especially central London, as you can see, LSE, UCL, or King's College, they are the universities. And the rest of the colorful icons are our sites. And when I say sites, it's live site, active sites. So instead of just purchasing a small land, we build a concrete building, a block, and leave the place, we actually hold the land from 5 years, 10 years, all the way to some of the sites like 30 years. So we do want to build a big community. So it depends on which location and what kind of lifestyle you want. Some people prefer to move in somewhere very new or somewhere already quite mature community. We all got the choices for everyone.
100%. And all of these different labels you can see on the screen, is where you said these are all the different developments that we are currently selling within London. All of them, bar 2 or 3, carry a 999-year leasehold. They are all, as I said at the beginning, mixed-use developments. So large communities that we are building with amazing residential, world-class facilities, and an abundance of commercial space. So every single one of those little icons is essentially a small town within itself that we're building in London. For anyone that's not particularly familiar with the map they're looking at, I'll just give you a slight overview of what's going on. So London is essentially like, if you're from Singapore, if you're watching from Singapore, you think of the MRT system. If you're watching from Hong Kong, you think of the MTR system. All the different lines that are going through the map are exactly the same. They're just all the different rail lines. Very efficient, very quick to get around. And that middle circle, the white circle, is zone 1. So that's central London. And then the next ring, the brown ring around that, that's zone 2. That goes all the way out to zone 9. So property prices are impacted by which zone you're in, whereabouts in London you're in. The blue line going across the map, that's the River Thames. So everything above that blue line we call north of the river. Everything below that blue line we call south of the river. This again can have an impact on property prices. So wherever you're kind of looking to move, with all those different MRT lines, you've got very, very efficient movement kind of around the city, and there's an abundance of different options to decide kind of where to live. Have you got somewhere in particular that you think is the best place to live?
I guess everybody has their own preference, but I would like to point out, if you're students, and do pay attention to your university location. It might not be just one location or one station on this map, because the unis in London, they are quite spread out You may have campus in zone 4 or zone 1 or different locations as well, buildings, libraries in another station. So just be careful and double check which building or which campus that you are going to. And then to me, transportation is always #1 priority. I'll definitely choose something that closer to a station, and then also this line can take me to the landmarks or the museum or libraries where I would like to visit. Yeah. What about you?
I think kind of the magnificent thing about London is that it's very diverse, and there's a number of options of where you can live, and there's no one best spot to live.
True.
That's the fantastic thing about the city. So if you're the sort of person that likes to live kind of where it's all happening, in the middle of all the bars and the restaurants and the clubs, you know, right in the middle of the central business district, you have that option. But you can also live kind of a bit further outside, zone 2, zone 3, outside of the city, but still have that very fast connection kind of into central London. You can live by the river, you can live absolutely anywhere. But of course, kind of the beauty of London is you can live outside of London.
Even outside London, yeah. So on this map, it's the purple line on it. It's the Elizabeth line, or also called the Crossrail. So as you can see, it goes all the way from central London to West London, another city called Reading. Actually, I do have a friend who studied in University of Reading, but lived in central London because she just enjoyed the lifestyle there.
Yeah, 100%. And obviously with the two different types of buyers we have the people that want that kind of the lifestyle. So Reading is a great option for people that want that quieter lifestyle, but still with very good access into London. The benefit of this Elizabeth line as well is that it connects directly to Heathrow Airport. So if you're flying directly from usually this part of the world to the UK, a lot of the time you are going to be going into Heathrow Airport. And so you've got that very quick access straight into the city. I think another thing that this picture really illustrates is kind of how fast the property market within London is expanding.
Yeah.
It's, you know, the railway system within London, the tube system, it's not just within London. It's now coming outside of London, and that puts, you know, a whole kind of new dynamic on the property market outside of London. These kind of commuter towns, that commuter belt. As an investor, you now have the option of buying kind of outside of London at a slightly lower price point, and still kind of attracting those people that are wanting to work within London.
Yeah.
And in terms of, you know, lifestyle, yeah, if you don't want to live within the city, you can live outside of London, but still have that very, very quick access into the city where your work or your university might be.
And they're still building. This is just a phase 1 Crossrail.
Yeah.
There's phase 2 coming up.
Yeah, absolutely. It's very, very exciting.
Next page, I guess a lot of our audience today may wonder what's the exact steps to buy or purchase a UK property. Is there any hidden rules that I don't understand? I don't know. Of course, more than welcome to book an appointment with us and come to our office to have a coffee. But on this page or slide, I'll take a few key points. So basically, first, choose a property. You don't have to fly all the way to UK. You can do it from here. You can sign the reservation form on your phone, in our office, on your computer. It's very easy. And in our office, we have the same interactive system as the UK marketing suites. We can do live stream, we can do video calls, we have the photos and pictures, images, everything as if you are in our marketing suite.
Yeah.
And the next one I would point out is after exchange is when the relation manager comes in, that will keep updating you on the construction progress, on the stage payment, also remind you when to look after getting a mortgage. And once you collect the key, exchange the keys, when you start to pay back the mortgage, and when your tenants moves in. Yeah,
I think a great summary of this is that buying property in the UK, it's very easy and anyone can do it. Anyone can buy and anyone can sell. There's no restrictions.
No.
It's very transparent. So the legal system within the UK is used within hundreds of different jurisdictions around the world because of its kind of robustness, its reliability, and because of, you know, historically how reliable it is, essentially. But it's very transparent. There's no kind of hidden bumps along that road. And similarly with buying property with Berkeley, that's kind of what we strive for. It's why we have different offices around the world to be in our buyers' time zones. It's why we are so well known for our customer service. And it's why we, you know, really, really strive to make that process of you putting in that kind of reservation all the way to you having your keys handed over as seamless and as easy as possible. So this essentially wraps up the first section of the webinar. And it would be fantastic if, after the webinar, you could send in an inquiry, or if you'd like to come into our office or have a chat over Teams or Zoom, we'd love to kind of talk to you about the UK property market, what's going on in the UK property market, some different options that Berkeley potentially has for you. And it might just be me or Weiyu that you end up talking to. But thank you so much, Weiyu, for joining me for the first part of the webinar.
Yep. All right. I'll leave the time to you and Samuel.
Thank you very much.
Thank you, everyone.
So for the second part of the webinar, I am going to invite my next guest, who is Samuel from Capricorn. So Capricorn have multiple offices around the world. They are primarily based in London, but they focus on doing UK mortgages for people anywhere around the world looking for financing. So thank you so much for joining me today, Samuel.
Yeah, welcome. Hi, everybody. My name is Samuel. I'm from Capricorn Financial, and we are London's largest mortgage broker, headquartered in London, of course. We have 5 global offices: Hong Kong, China, Dubai, and I'm based here in Singapore.
Yeah, so I mean, as a small summary, we'll talk about what the options are for people buying property in the UK, and I think generally that is kind of the biggest question when people come to our office and they want to speak about buying property in the UK. Before we even get on to the property itself, it's always kind of, what are my options in terms of financing? And a lot of people don't realize that they can actually get a mortgage from a UK bank, and get lending from a UK bank, and kind of what goes along with that. So, what's Capricorn's role in that? Why do people kind of go to Capricorn for this service?
Yeah, I mean, that's my bread and butter. Right? So day to day, many investors they think that they only can borrow from the local lenders like UOB, Maybank, or in Hong Kong, the BEA Asia. So they don't know that they can borrow from the UK banks, and once they know that they can do UK lender, they don't have to have the burden of the debt servicing ratio in their local country, then they are more willing to go explore residential property in UK.
Yeah, no, absolutely. And I think a great way to kind of start this section of the webinar would be to kind of get into what's going on in the market. So if you could just give us kind of a market summary of just the interest rates. And I know interest rates are obviously, they've gone up and down in the UK, and people are always asking, is it the right time to buy? Should I be waiting for the interest rates to go down? Are they going to go up again? They're concerned about what kind of mortgages they're going to get. But what are we currently seeing in the market in terms of interest rates?
Current Bank of England is at 4.25%, and it is pretty positive from last year, where it is like 5.25 for about a year. The whole 2023 and 24 is 5.25%, and now we are seeing it come down for 1% throughout Q4 last year till now, till today, and we are still expecting another 2 rate cut this year, which is very, very positive.
Yeah, no, fantastic. And so we can get loans in the UK. That's kind of the main thing we're saying. There's a lot of people that are going to be watching that haven't purchased property in the UK before. So this section is essentially for you. You're wondering, can I get a loan in the UK? Yes, you can. The next couple of slides we're going to have a look at are kind of what the requirements are. So who can get that loan, and what are the banks going to ask for? What are Capricorn going to help you with? So what do you need to have ready if you're going to start kind of applying for that mortgage? So in terms of kind of the lending policy and what people are looking for, could you give us a bit more of an insight into this?
Of course. So every lender have different kind of criteria. So income criteria, some lender need like 100,000 of annual income, some lender 50, some lender 20, and even there's lender who don't need income to even borrow from them to start off with. So any kind of clients, we are able to support them. Lending value, loan to value, we can go up to 80% of the loan. So that's very, most clients can take that 20% down payment. For buy to let, meaning investment property, they do a rental income stress test. That's very asset-based lending. But what we are looking here today is more of residential, buying for their kids to live in. So what you can do is owner of occupation, residential mortgage, or third-party mortgage, which we call it a guarantor mortgage.
Yeah, no, of course. And at the beginning of the webinar, I mentioned there's obviously 2 kinds of buyers. There's those buying for lifestyle, for their own families, and there's those buying for investment. So of course, there's 2 different types of mortgages. There's the buy-to-let mortgage, and then there's the mortgage you would buy if you're kind of buying it as a residential home, as a family home. So could you take us through the kind of the different kinds of mortgages?
Sure. For first time buying for your children to live in for their university years there, right? You can buy it in your own name, you with your wife, you with your children. So this will be a residential mortgage where your children live in your name, or you and your wife's name, vice versa. So on this case, in UK there will be a slightly higher stamp duty because they favor the first time buyer, where stamp duty is slightly cheaper. So this is the downside, but the good side is the mortgage interest rate is very low. So it starts from 4.2% for residential mortgage. It supplies you more comfort because you are supplying the deposit, and your children live in. And once your children finish their university years, you can actually change it to a investment property, and you let out the property, which is pretty sweet.
Yeah, 100%. And this is what we were saying kind of earlier, is that that's sort of the beauty of being able to buy a property, right? Is you can use it for what you need to use it for, if that makes sense. Whilst you're studying, for example, if you're moving to the UK as a student, you can get that mortgage that services kind of the need, right? So you're living in it as a resident, and that's kind of mortgage you can get. And then when it comes to finishing your studies and perhaps leaving the UK, you might want to rent it out, and then that's when Sam can kind of remortgage your property, and you can get a buy-to-let mortgage.
Exactly.
And in terms of kind of the terms, the rates, the fees, what Capricorn kind of looks for, what should people expect?
Yeah, I mean, currently best rate right now for investment property it's 4.3%. Residential, of course, the UK lenders are favoring residential because they want you to have a place to live in. Starts from 4.2%, and the UK lenders usually do charge a fee. They call it arrangement fee. It starts from £2,000. It's a flat fee, or 1 or 2% of the loan amount, and the lender will instruct a surveyor to value the property, value the rental, value the market price of the property, to actually see what they are lending matches the value of the property. And legal fees, of course, this may or may not be absorbed by the lender, and we do charge a broker fee of £1,500. There's a maximum age where if it's a buy-to-let, you can go up to 85 years old or 90 years old, depending on which lender we go. Loan tenor can go to 25, maximum 35 years. But for residential, we are typically looking at the 25 years loan tenor and up to 70 years old.
Yeah. Okay. And just to kind of interject there, if you've got any questions related to mortgages, please do keep putting them into the question box, because we will have a bit of time at the end for Samuel to answer some general questions. But of course, if you've got some more personal questions and you want to know about mortgages linked to your personal circumstances, we'll have Samuel's details up at some point, I'm sure, and you can get in touch, have a one-to-one consultation with him, and then he can kind of take you through your potential borrowing options if you're looking to buy that UK property. So the next part is, I mean, this is the bit that usually gets people kind of very excited, because it's especially for if we start with kind of investors, for example, if you look at that potential of students going to the UK, buying a property to live in, and then having that chance to be an investor, start their portfolio afterwards, they've got the option of an interest-only mortgage, which a lot of people don't realize.
Yes, I mean, this is the beauty about borrowing in the UK, where I believe only UK and Australia, they offer interest-only mortgage, where most of the people don't really get what is interest-only mortgage. So what is interest-only mortgage? Meaning, if you only pay down interest every year. So for example, if you borrow 100,000 as a mortgage, and the interest rate is 5% per annum, which is £5,000 per annum, you need to pay the bank. You only pay the bank for about £416 per month, which is the interest, and you do not pay down the principal at all. But what is this good for? So it provides more flexibility, and it lessens the burden, your month-to-month burden to pay down the mortgage servicing every month. And you can put the additional cash that you have in any other investment instrument you have, like another property, any stocks and shares if you choose to, you have better knowledge of. So this is a way of better than putting it into the bank with no perks at all. It's literally parking your money in the bank.
Yeah, of course. And obviously it makes it much easier to kind of start your journey to building a portfolio, because you don't need as much initial cash to put down. So if you've got lower monthly payments, you can kind of save up that cash for your next property. And kind of alternatively, you could buy your first property with less cash and then eventually remortgage it, pull some of the value out of it, and buy your next property. Exactly. And that's how a lot of people in the UK do build their portfolios up. So obviously, you know, most people that are listening to this webinar, they've probably only dealt with local banks. For example, if they haven't dealt with a UK bank to purchase property before. So I think it would be good to kind of go through what to expect from a UK bank, the pros and cons. And on the screen right now, we've got UK bank compared to Singapore. Just as an example, there are going to be many of you listening from other countries where your local banks have kind of different regulations and it's different kinds of experiences working with those banks. But if we could just focus on kind of the UK side and what we should expect from them, what it's like working with them, the pros and the cons, would you mind taking us through this?
Yeah, I mean, what's good working with the UK bank, obviously. So if you borrow from the UK, you're not subjected to whatever debt servicing ratio you have in your home country. I mean, every bank that you want to borrow in your home country, they will calculate your mortgage you have in your home country, your car loans, your bank loans, personal loans, probably school fee, student loans if you have any. So this all will be taken into consideration if you borrow from a local bank, and then they will generate out a sum that you can borrow for your next property in your home country. So if you borrow from the UK, it will not be taken into consideration. Secondly, it's obviously is interest only. You have the option of interest only. This is only available in the UK, and most of the foreign lenders do not have interest only option. UK lenders do lend to corporate structures where most of the foreign lenders do not lend as well. So if you would like to buy your property in corporate structure, we can support that as lending as well. And corporate structure, meaning what's good at corporate structure is if you were to pass your property to your next generation or your partner, you can pass shares to them. So that's what most of the investors are trying to do if they are purchasing in corporate structures. And there are abundance of products and choices like fixed rate, floating rate, 5 years fixed. So there's a lot of choices if you are going to borrow from a UK lender. And they are lending to anywhere in UK. You can do a remortgage equity release. Equity release meaning if your property that you have purchased have increased in price, rental have increased, you got an opportunity to take up the equity to purchase another property in UK if you wish to. So the foreign lenders do not offer equity release from, I mean, in lenders in Hong Kong, Singapore, Malaysia, they do not offer this. So this is the pro. Of course, there are some downside of borrowing in the UK because we do not have a credit footprint in UK. They will take more documentation for us, whereas our home lenders, they have our credit report. They can run credit on us easily. So time of having the offer is quicker in home country, and in UK it's slightly longer. It takes about 6 to 8 weeks to have a mortgage offer, more documentation, and they do charge a lender fee of £2,000.
Yeah, no, 100%. The pros and cons, but more pros I would say than cons. So it can be a very good experience dealing with a UK bank. I think the next thing we're going to look at is an actual case study and kind of comparison of an interest only and, you know, in P plus I, principal plus interest. Something I will say is that I can already foresee there's going to be a lot of questions about tax and the tax implications that come up when buying a UK property. It's not something we're going to address in this webinar, but if you would like to inquire about a one-on-one consultation with us, again, in person in our office or over a Teams or a Zoom call, it's something we'll take you through. We'll take you through all of the stamp duty, all of the different tax implications. Of course, we also will have tax advisors that we can introduce you to. And of course, you know, from the financing side, we've got Samuel from Capricorn. So what we've done here is we've put together a case study from the same development that we looked at before. So before we looked at a case study where one of our buyers had bought a property from the Green Quarter for her daughter who was studying at university in South London near Elephant and Castle. And this is the same development. So we've actually taken one property that we have on the market at the moment to make it a bit more of a realistic example. The purchase price of this property is £545,000. And we've kind of got a rental estimate at the top, which is £2,350 per month. So it's for a 2-bedroom apartment. And the 3 different options here are essentially for 3 different people that have 3 different kinds of deposits. So Samuel, would you mind just taking us through kind of a couple of those examples and explaining what the numbers on the screen mean?
Of course. So purchase price 545,000. Loan to value, we have three examples here. We borrow 75%, 65%, and 55%. So on interest only, all three choices are positive if this is a rental property. So on interest only, month to month, on a 75% borrowing, it is you only need to service 1,700 per month. This assuming the rate of 5% interest, which is on average, it's 5% right now. And like say, for example, if it's capital repayment, so if you see on the screen, capital repayment, 20 years, 25 years, 30 years is the loan tenor we have. Capital repayment is if we choose to pay down the principal amount, which is what we practice here in Asia, right? We pay down the loan along with how much tenor we have. After 25, 30 years, we own the property 100%. So if we choose to pay capital repayment on 20 years, obviously there's a slight deficit. It's 2006. But if it's 25 years capital repayment, we break even about 2,300 per month. And if it's 30 years, we are on positive. So our monthly payment is 2,001. And if you put even more deposit, a 35% deposit, we borrow 65% on the second row. It's all positive. So from interest only to 20 years capital repayment, it's all positive. And needless to say, 55%, it is all positive.
I can imagine a question you must get quite a lot is, should I get interest only or should I do the capital repayment? I mean, why would I not always just get an interest only repayment? Why in what scenario would I get a capital repayment?
There are a lot of thoughts on this. I personally thought of this a lot as well, because most of my clients say, Samuel, what do most of your clients go for? So what do most of my clients, I mean, 90% of my clients go for interest only payment. Reason being, the interest rate right now is at about 5%. So it's slightly on the higher side. They don't want to have a negative cash flow. So on interest only, they will still have positive cash flow. They still have cash coming in monthly. So it is easy for them. But let's say, for example, if the rate is slightly lower and they can choose to do capital repayment, own the property outright at the end of 25 years, it is a positive way as well, because the tenant is actually paying for your principal, which is for saving for themselves in 20 years, 25 years. Everything is saved up for them.
Yeah, no, 100%. And I think, personally, for the main takeaways from this should be that you have the option. So, exactly. if you're going to borrow from a UK bank, you have the option of interest only, capital repayment. And we've spent the first portion of the webinar talking about how easy it is to kind of buy property, the abundance of options you have when you come and talk to Berkeley, and how many different options we can give you at very various price points in loads of different locations. In terms of getting the actual financing bit done as well, you've got the option of interest only, capital repayment. And of course, for this price point of £545,000, you can come in at £136,000, 250 with that sort of cash. So when we were talking before about our portfolio having options of £200,000, £250,000, you can see that just to start your portfolio in the UK and within and around London, you actually don't need an enormous amount of cash, especially compared to other countries that are very popular to purchase in at the moment. So for the last slide, I think it would be good to kind of go through kind of just the general application process. So what it looks like when someone first comes and speaks to you and they have their first discussion. What does that kind of whole process look like from initial discussion and assessment to kind of getting that loan?
Yeah, so I mean, it's good to always speak to us as early as you can, even before you get the property. We know what kind of situation are you at, especially business owners or self-employed individuals. We will, because most of the time your account will be not very complicated and and it will be very difficult for the lenders to actually access how much to lend you and your situation. So once we speak to you, we will be able to let you know how do you structure your account, how do you put in funds to your personal account, your banking, your business account. So we'll be able to advise you on how to do it, how the UK lenders will see you. So once we have this, you will be good for taking a loan in the UK. So firstly, we'll access the situation, your profile to recommend options. So once we have recommended options to you, and you chosen your options, within 1 or 2 days, we will be able to provide you with in-principle approval. So, and you're happy with the options, we will call for more documents. Documents that we will need for a UK loan application is bank statements, pay slips, tax return if you are self-employed, and your passport, of course. So once we have that submitted and the credit is happy with your documentation, the bank will instruct for surveyor valuation of the property. And once the valuation, if the valuation matches or not, the bank will offer you the bank will give you a mortgage offer, and it will lead to the legal process. So all in all, it will take 6 to 8 weeks to the mortgage offer and another 2 to 3 for the legal process to draw down of the funds.
Yeah. Okay. Yeah. Fantastic. So relatively straightforward process, and obviously Samuel and his team are here, to help you through the whole way. So this actually brings us to the end of the webinar. We're kind of getting to the point where we'd like to be able to answer some questions. Before we kind of get to that point where we start answering some questions, I just wanted to kind of summarize what we've discussed today. And that is, essentially, Berkeley are an enormous developer. We have an enormous presence in the UK, and we build all over the south of England. An enormous presence within London, surrounding areas of London, the south of England, and the Midlands. So we do really have an endless amount of opportunities, and some absolutely fantastic opportunities at all different kinds of price points. We have offices all over the world, so 8 different offices, including the one here in Singapore, where our whole, the whole reason we're here is to service you, to be within your time zone, and for you to have access to us essentially 24/7 for kind of that initial consultation where you're looking for what to buy. And then even once you've purchased, we're here to kind of help you along the way. So we're here to hold your hand through kind of the process of the solicitor, the financial advisor, mortgage broker. When it eventually comes to kind of exchanging and that road to completion, we're here until you've got your keys. And then, you either start your portfolio or you begin your new life in your new property. So it would be great for you to get in touch. I believe our contact details are on the screen, and so is the address for our office, so you can see where you'd be coming to. And of course, Samuel as well from Capricorn, also based in Singapore, and I don't think we have his details up on the screen, but we will of course pass his details out to all of you that are watching. And yeah, similarly, I think Samuel would be honored to sit down with any of you and kind of go through your financial situation and the lending options. So thank you so much for being a guest on the webinar today. And I believe we have time for some questions. So just see what questions we've got. Okay, so this one's for you. Sure. So we have a question. Do UK banks offer floating rates? Can you give examples of current rates?
Sure. So current floating rates. So we have the best floating rate right now is the base plus 0.88. So the best floating rate is 5.1, around 5.1%. Okay. 5.1%, and averagely it will be plus 1 to 2%. The margin will be 1 to 2%. So it really depends. If it's Bank of England, the tracker is Bank of England.
Okay, fantastic. I hope that answers that question. And I think most of our questions have been answered by our live team that have been working very hard answering all the questions. So that's the only question we've got that was left for us. So of course, any questions that you have kind of remaining that you've not had a chance to ask, you can send them over to us, or we can discuss them when you get in touch. But I believe that's pretty much everything from us. So thank you so much for taking the time to tune into the webinar and listening to what we have to say today. Again, I keep saying it, but we really would love it if you got in touch with us and we could talk to you more about your upcoming property journey. And yeah, Thank you very much, and we look forward to seeing you at the next webinar. Thank you.
Thanks, guys.
One of the UK's premier house builders and an award-winning FTSE 100 company, Berkeley Group comprises of 6 autonomous brands, each an expert in a particular regional specialisation. We've been delivering exceptional properties in London, Birmingham and the south of England for more than 40 years. From luxury penthouses, family homes and stylish apartments, we are experts in creating fantastic homes in amazing places and are renowned for setting exceptional standards in quality and design. To us, every project is an opportunity to transform lives, one development at a time. When you think of UK, think of Berkeley Group.